Right now, your investments are trapped, held down by invisible forces you can't see but definitely feel. But what if I told you 2026 holds the key to breaking free? Not through luck, not through gamble, but through a precise financial maneuver used by the world's top investment strategists. I'm Nosy, and I've analyzed over 300 pages of proprietary research from Goldman Sachs, UBS, and the world's top investment banks. Today I will share with you what they are predicting for 2026. Let's begin. Markets entered 2026 riding historic highs. The S&P 500, European STOXX 600, and Japan's Nikkei have all repeatedly broken records, reaching peaks we've never seen before. But here's the reality most investors miss. This rally is incredibly narrow. The top 10 companies now make up 40% of the entire S&P 500's value. It's like building a spacecraft with just one engine. It might get you off the ground, but it won't sustain the journey. Think about this. The top 5 US tech companies alone have a combined value greater than the entire economic output of Japan, India, the UK, France, and Italy combined. That's extraordinary concentration in a single market segment. Currently, we're in the most expensive market environment in 2 decades. Most major asset classes are trading in their highest valuation range since 2005. When markets reach this level of expensive, traditional strategies stop working. The easy money has been made. Future returns won't come from multiple expansion. They'll come from identifying where real earnings growth is hiding. Furthermore, an invisible force is growing stronger, pulling down economies. $100 trillion. That's how much global government debt now exists. To put that in perspective, that's more than $12,000 for every single person on planet Earth. And in America, we're approaching debt levels not seen since World War II. We're financing peacetime spending with borrowed money, creating what strategists call fiscal gravity that no portfolio can fully escape. Moreover, for decades, our global economy operated on one principle: efficiency above all. But a fundamental shift is underway. The U.S. effective tariff rate has reached 18%, the highest level since 1934. Countries are choosing security over efficiency, resilience over cost savings. This isn't just about trade wars. It's about rebuilding entire economic systems. Like rewiring a spacecraft mid-flight, this transition creates turbulence, but also new opportunities. While gravity pulls down, powerful forces can provide upward thrust. 3 catalysts stand out for 2026. First, the AI revolution that has consistently shattered expectations. Second, investment leadership is expanding globally beyond US megacaps, with Europe and emerging markets showing compelling growth trajectories. And third, the search for diversified income is creating new opportunities as traditional sources diminish. First, on AI revolution opportunity, AI capital expenditure has consistently exceeded expectations for the past 2 years, signaling a durable investment cycle. CIOs project a cumulative $4.7 trillion in global AI capex between 2026 and 2030. Everyone's chasing AI stocks, but the smart money is making a strategic pivot right now. We're entering AI's second wave. The first wave built the infrastructure. The second wave, starting now, creates the real value through applications that transform industries. The strategic move? Look beyond the obvious megacap leaders to the companies, providing essential tools for AI adoption, and companies positioned to benefit from the massive enterprise AI deployment happening right now. Moreover, AI's hunger for power is creating one of the most significant infrastructure investment opportunities of our lifetime. Today, data centers use about 4% of US electricity, with a staggering forecast of 175% increase in power demand by 2030. It's about completely modernizing our energy infrastructure. Companies involved in grid modernization, renewable development, and utilities positioned for this surge represent a generational investment opportunity that will outlast any AI hype cycle. Next, for years, US exceptionalism dominated market returns. But the script is flipping in 2026. Emerging markets are projected to match or exceed US earnings growth. And here's the kicker. While US stocks trade at 22.5x forward earnings, emerging markets sit at just 12.4x. The opportunity isn't about abandoning US leadership. It's about building a complete growth portfolio that captures global innovation wherever it emerges. Finally, remember when cash was king? That era is ending. As central banks cut rates through 2026, that safe 4.5% yield on treasury bills will evaporate. This creates a silent crisis for conservative investors, what we call reinvestment risk. When your safe assets stop generating meaningful income, you're forced to take on more risk or accept lower returns. The solution? A diversified income strategy. In short, so how do we build a portfolio engineered for escape velocity? Your core remains US quality growth driving secular trends. Income engine shifts to quality bonds providing steady thrust. Your maneuvering thrusters capture thematic opportunities such as AI applications. Your protective shield? Tactical allocations to commodities mitigating volatility. And your exploration module? Overweight positions in emerging markets captures their cyclical recovery and compelling valuations. The 2026 mission plan is now clear. 3 precise directives from the world's top investment strategists. First, break free from US megacap dependence. Second, position for AI's second wave. Third, master the income shift. The gravitational forces facing markets today are real, but so are the powerful catalysts creating new opportunities. By engineering your portfolio for escape velocity now, you position yourself not just to survive 2026's challenges, but to thrive through them. Which of these 3 escape maneuvers will you implement first? Comment escape below and tell me your biggest investment concern for 2026. If this blueprint helped you see 2026 differently, share it with one person who's still keeping their portfolio grounded. Until next time, this is Nosy, helping you break free when the stakes are highest.